Hello, it's Tom Ciamatas again, Chief Investment Officer here at AE Wealth Management. It's that time again when we discuss the upcoming year. So let's talk about how 2024 will start out and what we can expect to see. 2023 turned out to be a pretty good year, rebounding from a dismal 2022, and I believe we're going to continue to see the momentum carry into 2024. Last year started with a lot of dread. Most of it was related to the specter of an overly aggressive Federal Reserve, but paradoxically, there were also expectations for potential rate cuts. Much of the concern was that the economy was teetering on the verge of recession, and ongoing inflation wasn't going down fast enough. We were experiencing higher costs on everything, especially gas prices. But even with all these concerns on full display, we still managed to have a decent comeback. Patience and discipline were rewarded. However, 2023 still had its fair share of surprises. Early in the year, expectations were high that the Fed would start cutting rates and that the economy would stumble. Well, the Fed did not comply and instead gave us an additional 4 rate hikes of 25 basis points each through July. The hikes killed the talk of rate cuts, and we finally settled in with a Fed funds rate of 5.25% to 5.5%. I did not feel we would top 5.5%, and thankfully my instincts proved correct. Inflation, which peaked in June of 2022 at 9.1%, has slowly and stubbornly drifted lower to about 3.1%. Jobs began to soften in the final quarter of 2023, showing the interest rate hikes were taking effect. Yet the economy was surprisingly strong despite higher rates. Consumers spent and traveled, and earnings were down but not out. The S&P 500 managed to gain over 20%, and the 10-year Treasury settled below 4%, leaving investors with an actual alternative to the stock market. I won't say 2023 over-delivered or that it didn't have its fair share of challenges, but it was a whole lot better than 2022 for the market. With all that as a backdrop, year-end momentum will carry us over into the first quarter of 2024. However, recession and inflation worries are lingering. We'll also have elections and world events to contend with as the upcoming year unfolds. I expect economies around the world to continue to slow, including here at home. I don't see a recession, and if we do have one, it will likely be mild and much similar to what we've been experiencing so far. As we see economic weakness and growing unemployment, calls for the Fed to cut rates will grow louder. Also in 2024, it's an election year, and no incumbent running for re-election will want to face angry and unemployed voters. So no matter which party they're in. I expect Fed Chair Jerome Powell's phone to be ringing a lot. I also don't believe the Fed's narrative of higher for longer, and I expect to see cuts by mid-year as the economy softens. I also see the 10-year yield grinding down to around 3% by this time next year. After publicly calling for the S&P to end 2023 at 4,600, I feel a lot of pressure to make a call now for 2024. The direction and the magnitude does matter, and I'm once more optimistic that we'll end 2024 positively and set an all-time record for the index. My target for the S&P is approximately 10 to 15% higher than what we are now. I will reiterate what I said last year, that average-wise, equity markets are up 3/4 of the time. I expect the equity market to turn positive again next year. If you hung in there so far, don't throw in the towel. And if you've been sitting on the sidelines, this has been a good time to start slowly wading back in. Whatever you decide to do, please consult with your advisor first. Make sure you've considered all the implications of a potential move, whether it's related to taxes or estate, or how a move might impact your retirement income plan. Finally, energy will continue to be a pervasive concern as we move forward. Expect continued volatility in gas prices unless and until we develop a coherent, sustainable energy policy. My forecast is that the Fed will begin cutting rates before we see 2% inflation. Energy will contribute to higher inflation, even as the Fed doesn't consider gas and food costs a factor in its inflation calculations. I'll be back with you in 3 months as we recap the first quarter and the start of 2024. We'll see how we're tracking and how we're doing with the markets and the economy. We'll also see if there are any new developments we need to consider. There's almost a guarantee, given all we've seen in the past few years, that there will be something new to factor in. Remember to review your goals with your advisor and make sure you're on track for your objectives. If you need to, rebalance back to a risk tolerance that's comfortable for you. I believe 2024 will be a good year for markets again. Thank you, and have a happy new year.